Hey guys, I'm DJ Tenhove with the Tenhove Realty Group. Thank you for coming back to our channel. Today we're going to cover the 2025 real estate predictions about the residential real estate market as were put out by Redfin. I'm going to give you my commentary on whether I agree or disagree. A little teaser here, I don't agree with all of them. Before we get started, my name is DJ Tenhove. I'm the owner of the Tenhove Realty Group. We are a real estate team here in New Jersey that specializes in helping people build generational wealth through real estate. That means whether you're a first-time home buyer, an investor, moving up to your dream house, we can help you make the right purchase. And if you're selling, sell at a record price to make sure we're setting you up for building generational wealth. All right, well, before we go any further, thank you for following us here on YouTube, and also check me out on Instagram. We'll put my personal and our team profile here. So without further ado, we're going to get into the 10 predictions from Redfin regarding the 2025 residential real estate market. And I want you guys to comment down below as you listen to these. Tell me if I'm off my rocker. Tell me if you don't agree with me, or if you do. I want to see these comments just start to pile up down below and we get a really good conversation going. All right, let's get into it. All right, let's cover number one. Redfin predicts that home prices in the US are going to rise by 4% in 2025. What do I think? I think that's actually accurate. I agree with them. So I'll give you some historical track record here. 4% is the average home price appreciation in the United States over the last 75 years. Some years it's 0, some years it's 7%, but on average it's about 3 to 5%. Now, COVID obviously is not normal at all. So when you saw a 15, 20% return on investment year over year, that is not to be expected. And unfortunately, for a lot of people who are just getting into the market over the last 5 years, they think that's normal. That is not going to be what happens. Now, if you've watched some earlier videos of ours in 2024 and 23, we were very bullish on 2025 being a very strong market, meaning that the real estate prices were going to go up significantly, larger than average. That hasn't really played out like we expected. We expected those increases in values to happen in 2025 because we expected interest rates to come down significantly from where they were, around 7%. Now, there's a good reason why interest rates haven't come down, which is that the economy is doing better than expected. And inflation has actually come down a little bit. All of that information bakes into not reducing interest rates on mortgages. As much as you would love for interest rates to come down, if they drive interest rates down, you're going to see home prices appreciate faster, and that could cause a little bit of a bubble. We don't anticipate that we're going to see interest rates come down next year, and there's a lot of technical reasons on why that might happen, but for simplicity's sake, just think that if interest rates right now are high 6s and just under 7%, you're not going to see 4% interest rates or 5% interest rates next year. I think there's a chance we touch just above 6%, and low 6s is probably reasonable. That little bit of movement in rates will cause the market to be strong next year and see an increase in home prices, but not enough to cause a frenzy, not enough to see the 10, 15, 20% appreciation year over year that people are historically not used to seeing or used to seeing during COVID. So yes, I agree with Redfin here. I think 4% is what we should plan for, but let's talk about why that is, right? So supply and demand is what drives the real estate market. There is, despite interest rates being high, and when I say high, they're not historically high, right? The average over the last 50 years is roughly 6.5%. So we're pretty much at where that is. But compared to the cheap money of the late 2010s, this seems expensive and feels expensive. But despite rates being high, house prices have not come down over the last 2 years. And why is that? Because of a lack of inventory. So it's supply and demand. There's still enough demand out there, even with interest rates being up, and the lack of inventory is causing the market to be stable. And if anything, last year we saw a slight increase in home values. Depends on where you are in the country, but for the most part here in New Jersey, we did see home prices go up somewhere between 3 and 5%. So I anticipate you're going to see the same thing happen next year. All right, prediction number 2. Redfin says that home mortgage rates will likely remain around 7%. Now, a little bit of a spoiler here. I answered this in my first one to some degree. I agree. I don't think interest rates are going to come down much. Now, I do think they're going to come down slightly, so I don't think they'll be at 7%. I think there's a chance we sit somewhere between 6 and 6.5% a year from now in January of 2026. Now, why is that? So again, if inflation has come down and the economy is buzzing along better than we expected, the Fed tends to not cut interest rates. So if you look back maybe 5 months ago, there was a consensus that the Fed would cut interest rates maybe 6 times in 2025. That's been changed now since the election to be presumed that it'll be about twice in 2025 that they will reduce rates. Now, just because the Fed reduces rates doesn't mean that it's reducing interest rates to mortgages, right? Those are two different things. The Fed rate is the interbank lending rate, but there's sort of a correlation between what the federal interest rate reduction or increase is and what happens to mortgage rates. The more accurate correlation is between what happens in treasury bonds and what happens in interest rates. And the simplest way to think about that is, as people get a little bit nervous about the stock market and they take their money out of stocks and put it into bonds, more people buying bonds causes the yields to come down. As more people flood into bonds, those yields go down, interest rates yields go down as well because they track one another. You don't need to understand that. All you need to understand is if the economy is doing really well this year, you probably won't see interest rates for mortgages come down. So I do anticipate we'll see probably somewhere in the low sixes, and I don't think we'll get there until the end of the year. So what you need to understand is that historically, mortgage rates are in the high sixes over the last 50 years, and that's right where we sit right now. It is really unaffordable for people who have a 2 or 3% interest rate on their current house to sell that house and buy another home that's probably more expensive than the one that they own and has possibly double or triple the interest rate. And that right there is why you're not seeing inventory come on the market. People during COVID were buying just because they wanted to upgrade and money was cheap and it was an easy time to buy. That's not happening anymore. And for the last 2 years, that's been the logjam that has caused the real estate market to just sort of gum up. I don't think that's going to change much this year as you start to see interest rates come down in 2026, which is what I think is going to happen. Then you will see that engine start to move faster. You'll see home prices appreciate more in 2026 because interest rates will come down and a lot more people who are sitting on the sidelines waiting for rates to drop will get into the market in 2026. Now, that will also cause home prices to go up, which means it'll be more competitive. So my advice to you is if you're a first-time home buyer or if you're someone who's thinking about buying in the next 2 years, buy in 2025. You will have less competition, although there might be less inventory. You can buy the house in 2025 with a slightly higher rate than what you might have in 2026, but you're going to have less competition. And then when prices hopefully go up in 2026 more than the average of 4%, you'll be the beneficiary of that appreciation on the property while it happens rather than waiting and trying to buy in that market. So if you're a first-time home buyer, make a sacrifice. Buy something that's smaller than what you need, or what you want, I should say, and get into the market so that you can participate in that appreciation that will likely happen in a greater detail in 2026. So sort of a cliff note to the first prediction, although I do think that home prices will appreciate around 4% in 2025. I do think we will see about a 7 or 8% appreciation in 2026. So the next 2 years look like they're going to be very strong for the real estate market when you average them out. Prediction number 3, Redfin predicts that there will be more home sales in the United States in 2025 than 2024. I agree. This is a bit of a shocking statistic that I think a lot of people feel that the market isn't moving very much, but don't really understand how minimal the number of homes selling has really become. In 2021, 6.12 million homes sold. In 2024, it was roughly 4.1. That's 30% of the market that is not sold. You're seeing a decrease in the number of homes by 30% from 2021 to 2024. That is why so many buyers are having difficulty still finding inventory despite interest rates being up. So I do agree. I do think 2025 will see more home sales than 2024. Now, the reason for that is going to be whether you agree with who was elected president or not, there was an immediate response from the market about confidence in buying and confidence in the real estate market. Within 48 hours, we were getting phone calls from people who had been sitting on the fence that they were now ready to buy again. Is anything dramatically going to change? We'll see what happens. But just that confidence that people have that for the next 4 years, they think they'll be in a financially better place than where they were the last 4 should cause more transactions to happen. Plus, as interest rates come down from 7% to potentially low 6s, you'll see a few more people who maybe have 5% interest rates that are willing to put their home on the market and sell. So I do anticipate that you're going to see slightly more home sales. I don't think we're going back to 2021 where we saw 6.12 million sales. I think we'll probably see maybe a 10% increase in the number of homes sold across the country, which is not enough. But that's also a good thing because if that tremendous amount of inventory came on the market this year, you would probably see homes actually go backwards. So because of the lack of inventory, it's going to keep the market stable and to some degree cause us to increase in 2025. So that's a good thing. One more little footnote I want to add here, which is I do think you're going to see more luxury sales happen in 2025 than in 2024. A lot of luxury buyers took their money off the table in 24 because they were afraid of what might happen at the election. So now that that's been decided, and for a lot of those luxury buyers, they feel more confident about their financial future for the next 1 to 4 years than they did prior to the election. I anticipate you're going to see more of those luxury buyers participating in the real estate market in 2025 than 2024. So across the country, your top 5 to 7% of homes prices in your local market, they should move better in 25 than 24. So again, here in Monmouth County, you're talking about Colts Neck, Homedale, Rumson, Fairhaven, along the Navesink River. In North Jersey, the luxury markets in Bergen County. You'll see those markets perform better this year than they did last year. So any luxury homes that have been sitting on the market, I don't anticipate you're going to see the same thing this year. They should be gobbled up. All right, prediction number 4, 2025 will be a renter's market according to Redfin. I agree with this one as well. I think that you're going to see rents become more competitive in favor of the tenant in 25 than they have been for the last couple of years. So let's get into why that is. Well, during the pandemic and just after, we saw a tremendous uptick in the number of people building and the number of rental complexes that were going under construction, right? It's taken 2 to 3 years for that inventory to be built and finished, and that's starting to come to market right now. So again, depends on where you are in the country. We don't have a tremendous amount of land here in New Jersey, but even still, if you look through northern New Jersey and you go out Route 287, Route 280, Route 287 and Route 80, and down here, even in Monmouth County, there have been a bunch of new construction rental complexes that have been built. Why are these rentals and not condos? Well, for the developers, rentals create an annuity for them, right? They can get paid every year when that person re-ups compared to selling a condo once. So you've seen a big increase in the number of people who are trying to build rental complexes versus condos for sale. So as a lot of that inventory across the country comes to market this year and interest rates are high and affordability is still low for most of the country, you're going to see people that are going to say, I'm going to hold off on buying this year and I'm going to stick with renting, especially since there's more inventory, which should drive rental prices down for landlords, unfortunately, because there will just be more supply than there is demand. So I do think that 2025 will be a renter's market. One footnote on this one. So although there was a tremendous amount of construction that started in late 20 and 2021, there was a complete hands-off as of 2022, 23, and 24. So as interest rates in the second half of 2022 shot up, a lot of builders said, I'm not building anymore. So there were not many new construction projects that started over the last 2 years. The stuff that was started in 2020 and 2021, maybe early 2022, that's what's coming available now. But because we had a proliferation of new projects that are coming to market now, and for the last 2.5 to 3 years, nothing new, you're going to see a lot of that rental inventory get gobbled up in 2025. And then probably 2026 and 2027, there's not going to be as much rental opportunity. So you're going to see rents go up into those 2 years and beyond. So if you're a renter, yes, it might be cheaper to rent than buy in 2025, but moving forward into 26 and 27, you should be a buyer, hopefully ahead of that market so that you can participate in the appreciation of it. But I don't think you're going to see rents stay low in 2025. But I don't think rents are going to stay low in 26 and 27 because you're not going to see as much new construction coming to market in those years as you will see coming to market this year. All right, prediction number 5. Fewer construction regulations will lead to more home building. I don't agree with this one. I understand the sentiment, which is that because Trump won the White House and because Republicans are largely going to be in power, there should be fewer regulations which lead to more home building. I do think there will be less regulations, which generally just happens when Republicans are in charge. But I don't think that's going to lead to more home building. Why? Well, things are still expensive. Rates are still high for most builders compared to what they were 3, 5, 6, 7 years ago. So the carry costs for them to carry the land and lending on the construction part of this cost more than it did 6 years ago. And on top of that, interest rates still being high, meaning that when buyers are looking to purchase, there's going to be less people buying right now than there will be in the future as rates come down. So I just don't think you're going to see home building dramatically increase this year. I think it'll remain steady. Whatever projects have started over the last 12 months, about the same average we'll see in 2025. But I think because we still have high costs of goods. Let's think about this, right? Yes, there's been inflation across all industries in the United States. But if you look at what a 2x4 cost you in 2019 compared to what it cost you in 2021 and 22, it was double, triple in some cases. Those prices really have not traced back because once once an industry knows you're willing to pay a certain price, they don't generally pull back. So I don't think a lot of those construction costs are going to go down. They're certainly not going back to where they were in pre-COVID pricing. And because of that, it's still expensive to build. Just to give you a frame of reference here, for a residential construction here in New Jersey, we used to quote that a builder's grade house, so like nothing special, right? Sort of a vanilla box, it was about $150 a square foot to build that. It's about $250 to build that house now. So when you look at what it costs to buy a new construction house and you think that the builders are just taking advantage of you, it's not really the case. Their costs on everything have gone up. The land has gone up, their cost of goods, the cost of labor, everything has gone up. And I don't anticipate that's going to drop that much in 2025 to see a proliferation of new home building. Again, as a seller, that's a good thing because that means you're not going to have a tremendous amount of competition with new inventory hitting the market in 25 and 26, possibly even 2027. Now, for the eastern half of New Jersey, this is not going to change for the foreseeable future because we have so much dense population already. There's not really that much land to build on. So where you see building happening is typically further to the western part of New Jersey, but still, you can't commute to the city from those places, whether it's Philadelphia or New York City, very conveniently. So because most people who commute to the city still want to be in the eastern half of New Jersey, I don't think that you have a fear about new construction all of a sudden taking control over the next 10 years and having all this new construction hit the market. There's just no land to do it. All right, prediction number 6. Wealthy people will pay less to buy and sell homes as commissions decline slightly. I don't agree with this one, and I'm going to give you some actual real world data on this as a listing agent, as the owner of a team that does 200 plus transactions in New Jersey per year. So if you don't know what they're talking about here, there was a lawsuit that ended with legislation changes this year, basically stating that sellers do not have to pay a buyer's agent a compensation or commission for bringing the buyer to the house. Now, news alert, that was always the case. As a seller, you always had the right to choose when you were paying your listing agent to sell your property for you, whether that agent was going to share part of the compensation with another broker or if they were not going to share. Now, regardless of what you think about the lawsuit, and I've got my own feelings about this, I can tell you what's actually happened. Very, very, very few people in our market have chosen to do anything different than what they were doing historically. Meaning, most people are still choosing to compensate their listing agent and ask that listing agent to share a portion of their compensation to the buyer's agent who brings the buyer to the property. Why? You've heard me say this. If you lose your dog, do you stand a better chance to find that dog if you go out and look for them by yourself, or if you offer an incentive to the rest of the town and say, if you find my dog, I'll give you this reward of $1,000? Well, you're certainly going to have a lot more people helping you find that dog and a better chance of finding that dog with all of those other people helping you. And that's the way the real estate market has worked. There's a reason why broker compensation was the way that it was, and I have not seen that change very much. I have seen a slight uptick in the number of people who are asking to be unrepresented or represent themselves in a transaction, but we're talking maybe 2 transactions that happened out of the 200 this year on our team. What Redfin is pointing to here as why they think that's going to decrease the costs for buyers and sellers is that there has been a slight retracing in the overall compensation. So if you look at August 2024, which was before the legislation changed, and post over the last 4 months, the average commission went from about 2.5% to like 2.42%. So they're seeing roughly a 0.1% chance or 0.1% decrease in the costs. I actually don't think this is going to be maintained. What people are failing to recognize here is even if a seller chooses not to offer compensation to the buyer's agent, that buyer's agent has a right to collect compensation from their buyer directly, which means now the buyer, in addition to paying the purchase price, their down payment, their closing costs, all of that, they now have a fee on top of that. Which I don't think anybody really argues that a seller should pay the seller's agent and a buyer should pay the buyer's agent. I think it makes a lot of sense. It just hasn't historically worked that way. But what you're seeing is that a lot of agents who represent buyers now are able to collect whatever fee is being offered by the listing agent, even if it's reduced from what it historically had been. And they're collecting a balance between that amount and 2.5% or 3%, whatever the fee is for working with that person. So I do think you're actually going to see costs slightly go up for buyers as costs either maintain or slightly go down for sellers. If this has completely confused you and you have like, DJ, what the hell are you talking about? Shoot me a message in the comments. I would love to hear what you guys think about this as well. And I'm open to conversation on this. And other agents across the country, if you guys are seeing different things than what we're seeing here in New Jersey, I would love for you to chime in also. Prediction number 7, the real estate market will consolidate. Now, I think what they're talking about here, and first off, I'll tell you, yes, I agree with this prediction. They're not talking about housing. They're talking about real estate businesses. And I 100% agree with this. So maybe up until 8 to 10 years ago, most residential real estate agents depended on their brokerage. And you were a single real estate agent, maybe a husband and wife team, and maybe you had an assistant, but teams largely did not exist. Now, for the average buyer and seller out there, maybe you haven't paid attention to this or seen this really happen, but real estate teams have sort of replaced brokerages. We all work at brokerages for the most part, but we are businesses within another business. And a lot of agents feel that the broker has a smaller role in their duty and their job as a real estate agent every day than they did in the past. The value is just not there as much as it used to be. The dependency on needing a broker is weaker than it was for probably the last 50 to 60 years. That being said, it's making it a lot harder for brokerages to survive. That plus the fewer number of transactions that have happened, and just to give you a frame of reference on that I didn't quote back earlier in the video, if you look at the number of transactions that happened in 2021, I said 6.1 million sales. The market took a 40% decrease in number of transactions from 21 to 22, another 40% from 22 to 23, and another 40% from 23 to 24. We're seeing the fewest number of transactions happen since 1993 as we have a booming population of millennials entering the home buying market. So we are dramatically shifted in the wrong direction where we just don't have enough transactions happening to supply the number of people looking to buy. We talked about this earlier in the video, but because of fewer number of transactions and the most real estate agents ever in history, because people got licensed during COVID thinking deals are falling out of the sky, I can become a real estate agent and make $1 million. There are fewer deals happening in the last couple of years than have happened in over 2 decades, 3 decades. So brokerages are really starving and trying to keep the lights on. So the smaller independent brokerages, for the most part, are not really likely going to stay in business for the foreseeable future. And you're going to see teams start to take over those brokerages and larger brokerages gobble them up. We've already seen this happen with a lot of local offices getting shut down, and places like Coldwell Banker actually close 3 or 4 offices and keep one open and squeeze everybody into that. So it's a debt consolidation or sort of managing expenses, but that can only happen for so long if the revenue's not coming in. So I do anticipate you're going to see teams have a much bigger presence in the market in 2025 and for the next 5 to 10 years. And I do think you're going to see a lot of small brokerages that unfortunately are probably not going to be able to survive, and you're going to see a lot of consolidation into bigger companies. All right, prediction number 8. This one's a really, really important one. Climate risks will be priced into individual homes, especially in coastal Florida. If you're in New Jersey here and you don't have relatives who live in Florida, or you don't know someone who's bought, which is highly unlikely because so many people from New Jersey have bought in Florida over the last 4 years, you might not know what I'm talking about. But if you go and look at what homeowners insurance costs in Florida right now on the coast, it is astronomical. Why is that? It's always been a hurricane likely area, right? But 2 hurricanes hitting within a week of each other this year, and the last couple of years, a lot of hurricanes coming and hitting Florida have caused flood insurance and homeowners insurance to shoot through the roof. You are seeing it now very unaffordable for people to go down there and buy. So Florida has been a very popular place for a lot of people to buy Airbnbs as well. You might find an Airbnb in Clearwater, Florida that's $500,000 to buy the house, but the homeowner's insurance on that property might be $30,000 or $20,000, which, yes, you heard me correctly. You're not talking about in some parts of North Carolina where your homeowner's insurance is $500 or $750. You're talking about $10,000, $15,000, $20,000 of homeowner's insurance because of the risk of hurricanes. And it has made it really unaffordable for people to buy certain houses. Their homeowner's insurance in some cases is more than their taxes are per year. And again, that's a yearly cost that gets added on to the house. So you're seeing a lot of people who have sort of pulled off and said, you know what? This doesn't make sense. First of all, if you're buying an Airbnb, that completely eats away at your profit margin. Second, if you're buying a vacation home for yourself or just a residence, you're going to move down there full time, it makes that house a lot more expensive, right? Taxes taxes in Florida are not necessarily that inexpensive. People forget about that. Yes, there's a income tax benefit to being in Florida compared to being in New Jersey, but from a real estate tax perspective, they're not that much less than being in New Jersey. And when you add on top of it the cost of insurance, it can be really tricky. Now, this also applies to New Jersey, right? So although we haven't had the risk of hurricanes like Florida has, if you look at flood insurance has doubled in a lot of places in New Jersey over the last 18 months. I'll give you a perfect example. So there's a peninsula that runs through Monmouth County, which is where Little Silver, Fairhaven, and Rumson are. It's separated by two rivers, one on either side, that run parallel to each other. Most of that peninsula, pretty much the entirety of it, sits within 1 mile of the water. And flood insurance is higher when you're within 1 mile of water. So you look at flood insurance for most of those houses in Fairhaven and Rumson, they have gone up dramatically. And buying $4, $5, $10 million houses there has gotten a whole lot more expensive when you look at what flood insurance is. So certainly nothing compared to Florida, but I do think you're going to see in places like Florida where there's a dramatic risk because of climate risk and a cost that's gone up because of it. I do think you're going to see that home purchases actually go down there and home price appreciation actually go down slower there than we see in the rest of the country, just because of the cost of getting insurance. If you live in Florida, if you've seen this happen, or if you're an agent down there, I would love for you to chime in the comments and tell me I'm wrong, or tell me what you feel about this. I'm open to conversation about it. I'd love to hear what you have to say. All right, prediction number 9. Mayors in blue cities will help reverse the flight from urban centers. So what they're saying here, and I agree with this, is that places like San Francisco, Los Angeles, New York, where there has been a huge flight from the cities, from COVID, but then also in the after effects of COVID for a couple reasons. One of them is that people didn't need to work in the cities anymore. We had the ability to work from home. So people traveled or moved or temporarily moved to other parts of the country where they didn't need to be in the office. That has largely changed. We saw this in New Jersey and New York dramatically over the last 18 months, where a ton of buyers bought luxury homes down in Florida and then were called back to the office over the last 18 months and are selling their houses in Florida and rebuying in New Jersey if they sold their place and didn't keep a second residence here because they need to be back in Manhattan. The other part of this is that there's been a tremendous increase in homelessness in these cities. Now, what they're saying here, Redfin is predicting that legislation is going to change that will cause less homelessness in these cities, but also because of what we talked about with the number of rental projects that were built over the last 3 years, you're going to see less homelessness in these cities for sure. And California's got a really, really interesting idea that they started a few years back that I think New Jersey could learn from, called ADU, additional dwelling units. 1 in 5 homes sold last year in California were an ADU. An ADU is an additional dwelling unit. So essentially think about this, right? In New Jersey, sometimes we have properties that are a half acre or an acre. They have a 2,000 to 4,000 square foot house on it. But you have room in the backyard that we just put a swimming pool or a yard for our kids to play that you could build another structure. Now in New Jersey, very few towns allow you to do this. And you think about Bradley Beach, they historically allowed that to happen, and those were really valuable because you can live in your primary house and then rent the back unit out during the summer or an annual lease. Certain parts of North Jersey, this is allowed as well, but that doesn't exist a lot in suburbia. Well, California used this ADU legislation to help create more inventory, not usually for sale, but more for rent, and an opportunity for owners of property to be able to generate income off of their property while solving the lack of supply for rental units. I don't know how this would go over in New Jersey, and I would love for your feedback on this. I asked my wife how she would feel about it if we were to build a dwelling unit in the backyard and cut another driveway in, or just extend the driveway for somebody to use the backyard. I think in New Jersey, people are very, very used to having their privacy on their single family lots. And it seems a little weird to have somebody living in your backyard or sharing the property with you, but it would be a really interesting idea. I don't necessarily think that's going to happen in Jersey anytime soon, but it is interesting to see how California used that to remedy some of their problems. And you might see that happen in other states across the country, specifically in other blue cities. All right, we're on the last one, number 10. Redfin predicts in 2025 that Generation Z will rewrite the American dream, cutting homeownership from the script. What they're saying here is that millennial buyers are not going to want to buy houses, and they're going to stay in with their family members living in their primary residence of their parents for longer and choose to rent long-term instead of buying. My answer to this is wholeheartedly no. I do think that in 2025, you will see more Gen Zers have to rent. Like we talked about earlier, there's still interest rates that make it not affordable for them, not enough inventory hitting the market, and the houses that do hit the market are being gobbled up by baby boomers who are downsizing into the houses that generally a millennial would buy as their first home, or investors are buying them and turning them into rental properties. So I do think that you'll see more Gen Zers rent in 2025, but the idea that millennials are not going to want to be homeowners is completely wrong. And this was what people thought going back 8 years ago as millennials were starting to buy houses. The first sweeping group of millennials came into home ownership age. This is a renting population. They do rent the runway, they rent cars, they have expensive lifestyles, and they don't really want houses. It's bullshit. You've seen it over the last couple of years. Millennials are the fastest buying group of people, if they can afford to do it, to buy houses. And I don't think that that's the case long term, that millennials are not going to want to buy. And I hate for calling you guys millennials, but people in the millennial generation that are not going to want to buy houses, I don't think is correct. Now, what I will tell you that millennials have done better than any other generation over the last couple of years is understanding that buying investment properties before you buy your own dream house or single family residence is the smarter way to do this. I've got to give my millennials a huge thumbs up, double thumbs up on this one, that you guys get it. You've seen so much information about this that rather than do what most of us did, which is save up enough money to buy your first single family house and then live the American dream and raise your kids there, a lot of millennials understand now that the smarter way to go about doing this is get into the market early if you can. Buy a multifamily property, a 2 or 3 family, live in one of those units, rent the other 1 or 2 units out so that they're covering your mortgage payment. You stay there for a year or longer, you move out of that unit, rent that one, so now the entire place is rented, and you've saved more money every month to build up a down payment to then go buy either the next multifamily and rinse and repeat, or you've saved up to now go buy your own single family home and you retain that multifamily property as an investment property. Most of us who are older than you bought our single family homes and then struggled till we got to a point of making more money to buy our investment properties. You're going to see appreciation of that investment property over a longer period of time be greater. So the earlier you can get into that, the better. And I have to applaud my millennials for getting this. Making a sacrifice of wanting to live in a single family house, they're making the sacrifice to buy the multifamily first and then the single family next. So continue that. And for any of my young millennial buyers who are curious what I'm talking about and how you could do this with an FHA loan, shoot me a note in the comments. Find me on Instagram. I would love to have a call with you and we can explain more about how you do this. Now, there's a little caveat to this, which is it's very difficult to compete in this market, right? So you have investors buying those properties as well, multifamily. So it's a little bit difficult to compete in that market. But there are different types of loans called DSCR loans where you can count the income of that property rather than needing the down payment. So if you're struggling to be able to come up with a 20 or 25% down payment on an investment property, let me know, hit me up in the comments and we can have a conversation about this. All right, guys, so there are the 10 predictions from Redfin for 2025 and my reactions to them. As you can see, I don't necessarily agree with all of them. And I would love to know what you guys think about my predictions or my thoughts on Redfin's predictions. I always appreciate you spending time with me. Please give us a follow, share this video with someone you know who could benefit from it. And if there's anything we can do for you, you'll see a link down below in the description where you can set up a call with me and my team, whether you're buying, selling, or investing in real estate in 2025. Let's get that conversation going.